With me is Mangalam Malu as well as Ekta Batra. For the market, it is not bad at all. The market is off the low point of trade, holding at the 17,000 mark, and not too many people expected there to be a lot of green on the screen, but I guess that's the market for you. It chooses to surprise every single time. Holding on well for the Sensex and the Nifty. The mid-caps are also just about getting ready to head into the green line. And what's leading from the front today is Bajaj Auto ahead of their numbers on Friday. That stock is seeing buying action. Coal India, Power Grid, HCL Tech ahead of its numbers in the evening is also up and about 2% higher. So things are not looking too bad at all.
Not looking too bad. Actually, you know, the bounce was on the cards purely from a data standpoint because it was so oversold. The question is whether it sustains or not. The mid-cap index's underperformance believes that maybe the street is sensing that there could be some sort of resistance at higher levels. But be that as it may, you know, given the global screen, we will take an 85-point gain on the Nifty and the Nifty Bank as well.
Well, yes, absolutely. At least Sonia and myself, both of us got the color right.
Even I got it right because it's grey. I can call it the steely resolve. May I?
or you don't, or you're expecting grey skies. I mean, that's the other one. That's the other way to look at it.
Well, depends on the way you look at it.
But nonetheless, yes, maybe there's more volatility in store for our markets because we have a lot of macro data which is due in the next couple of days. But as of now, we have a lot of stocks which are buzzing in trade. And one of the stocks that I'm watching is definitely Pharma. That stock is buzzing. That is because it's a big acquisition of a plant that they've made. So, for example, they have acquired Teva's Indian manufacturing facility, which is located in Goa. It is a bulk formulation facility. It will be for a cash consideration. We don't know how much they are shelling out for this particular plant, but nonetheless, they have also agreed to retain all of the on-site employees. Now, Teva's partner, which is Watson Pharma, will continue to operate the other manufacturing site that they have in Goa. Marksans will also continue to supply Teva's affiliates for a certain period of time, which is a certain number of products, till the end of FY23, and that particular agreement can be extended as per mutual agreement. Now, I did speak to some sources who are close to this deal. They said that this particular plant by Marksans, which will now be in Marksans' fold, will be used 100% for exports. They will be getting on board 130 to 150 people. Teva is currently using this plant to manufacture for their own subsidiaries in Europe and Japan. So it tells you a lot about the regulatory compliance of this plant. Teva's sale is likely because they have undertaken some restructuring in Japan. So that's the reason for selling this plant in India. Marksans will look for US FDA approval in the future. Currently, it will be used for the likes of the European, Canadian, as well as the Australian markets. And eventually, the facility investment would be around 200 to 300 odd crores. So definitely, it's a big milestone for Marksans because they will be acquiring a Teva facility in India, which does come with a lot of compliance standards already. So hence, you can see the stock up 6.5%.
Okay, looking pretty good over there. By the way, the mid-cap IT space has been picking up in the last few days. If you look at something like a Persistent Systems, it's up 1.5% today, and it's up almost 11% this month already. So there's some comeback. In fact, this afternoon, even KPIT Technologies is up almost about 3-4%. So this entire lot is looking pretty good. But what's not looking good is Delta Corp. It's losing in trade today, despite the company reporting its Q2 earnings, which were pretty decent. Is it a case of profit taking?
It could be a case of some profit taking, but importantly, it could also be the case of an overhang coming in on the tax front with regards to any sort of regulatory action coming by on, online skill gaming, etc. That's been a point of contention for these counters for a very long time. But be that as it may, the numbers were good, and there's no taking away from that. And I'm looking at these numbers quarter on quarter this time around, primarily because the base was so low that any comparison there would look, exaggerated. A 261% growth in the revenues year on year on a low base. But quarter on quarter, there has been an 8% jump in the revenue. The EBITDA has grown 14%, and at the same time, the net profits also have grown by about 19 odd percent. And this is heartening because the second quarter is usually leaner than the first quarter, in that the company has seen some sort of growth. The casino business has grown by about 9%, and the online business has grown by about 13%. The online business growing 13% is a bigger positive, primarily because of two reasons. One, the online incidence was much higher during COVID period where people weren't going to real-time casinos, but that has sustained post-COVID as well. And secondly, this is also the business where the company is looking to unlock value. They said that surge in domestic travel has led to the growth, and they've launched a new vessel which will further aid growth. The second half of this year is essentially seasonally stronger for the company as well, so that could be a bit of a trigger. But then again, the tax impact overhang remains, and the stock also entered the F&O ban yesterday, so that could be a technical reason why it's underperforming today.
Okay, all right. So that's on Delta Corp. That stock just about lower by around 0.5%. Sonata Software is also in focus on account of a business transformation CRM project. So that stock is holding up with a gain of around 1.5% as well. But let's move on. Nmdc has moved towards listing of its steel business. Sonal is here with the details on this story.
Thanks a lot for that. Well, yes, Nmdc will be in focus because they have finally received approval from Ministry of Corporate Affairs for demerging Nmdc's steel plant. And in next 2 months, we should be seeing this being listed separately from the original business as well. Now, the next question that really comes to our mind is how to value this Nmdc steel business. So, company has a capital expenditure of approximately 19,000 crore rupees on the steel plant. So, if we go by the capital work in progress levels, because market is valuing it at those levels, if it is completed by 40%, it would be listed at 26 rupees per share. If at 50%, then 32 rupees per share. And if 75%, then 49 rupees per share. So at those levels of capital work in progress, the listing price would be decided, and that is the next big event that we'll be watching out for.
Okay, thanks a lot for that, Sonal. Well, let's talk about some more stocks that are in the news this afternoon. Abhishek is here to give us a quick wrap on all of that. Abhishek, what's on your list today?
Well, Sonia, to begin with, L&T Finance is on radar given the fact that they have received approval from SEBI with respect to proposed merger of L&T Mutual Fund with HSBC Mutual Fund. We saw in bulk trade take place yesterday in IndusInd Bank. So over there, post-market, we had the update coming in with respect to Route 1 Offshore Master Fund, who sold about 37% of their stake in IndusInd Bank. So they did sell about 1.2 crore shares. Now they are left with a balance of a little more than 2 crore shares. So it takes their holding down to 2.86% versus 4.54% that they had earlier. Another block trade did show on Tilak Nagar Industries, wherein BofA Securities has bought about 46.9 lakh share or about 2.84% stake in the company at a price close to rupees 100 per share. EARC Trust, they have sold about 50 lakh share or a little more than 3% stake in the company. Back to you.
All right, Abhishek, thanks a lot for that. So those are a bunch of stocks in the news, but come back after this short break and we will focus on Suzlon in our special segment, Insight Edge. We spoke with the management this morning. Vivek will get us all the insight that he got from that conversation. Welcome back. You're watching us here on Halftime Report. The market continues to rise now and quickly at that. We have the Nifty now sitting closer to that 17,100 mark. And most of the gains actually have been led by not only the Nifty Bank, which is currently sitting with a gain of almost 200 points. We have L&T as well as HDFC. Both these heavyweights on the index doing well. So L&T has moved to the high point of trade. The intraday chart of that comes up for you. HDFC Limited is the other one. It's a non-banking financial stock, so not on the Nifty Bank. So that is another one which is leading the index higher. And the third one actually, which is just swum into my ken, is ITC, which is up almost 1.5%, 2% off the lows at the high point. So together, these three heavyweights and the Nifty Bank have led the Nifty closer to that 17,100 mark. But the stock on our radar right now is Suzlon, and this in our special segment, Insight Edge, where we get you all the insight and an edge over all of that from the conversation that we had with the management today. Vivek is joining in to talk about Suzlon. The company has rejigged its management, of course, after the passing away of former MD and CEO Tulsi Tanti. Earlier today, we spoke with the top management as well. Vivek, what do you make of the conversation and what does the future look like for the company?
Well, that's right, Mangalam. A very interesting conversation with the management, with the new management of Suzlon after the unfortunate passing away of Sri Tulsi Tanti. So as of now, the management control lies largely with the Tanti family itself. So what the management has done is the board has appointed Vinod Tanti, Tulsi Tanti's brother, as the chairman and managing director for 3 years more, and Girish Tanti as the executive director and executive vice chairman for 3 years. So what the management indicated in our conversation is the fact that they expect management to largely stay within the family. In fact, they also said that the Sanghvi family, Dilip Sanghvi, also owns a significant stake in the company. They said that they would also be tapping into his knowledge and his expertise as well, as and when required. But largely, they do not foresee any changes as far as that particular management control is concerned. More importantly, what was the overhang was the smooth control or the smooth process as far as the rights issue was concerned. So the management came and they said that the rights issue is on track. There are no delays there. The company is looking to raise almost 1,200 crores via this particular rights issue, and importantly, the promoters would be participating in the rights issue, and also Dilip Sanghvi too, has confirmed that he would continue to participate in the rights issue that was earlier mentioned. Importantly, the debt picture of the company, it's one of the companies that has quite a bit of a large debt, and it's been struggling in order to pay its interest repayments on time. So what's going to happen is that the company, out of the 1,200 crore, 900 crore would largely go towards debt repayment, and the company, which had a EBIT of around 850 crores in FY 2022, is targeting a debt to equity ratio of close to 2:1. When it comes to the shareholding pattern, and Mangalam, you did prod the management quite a bit in terms of how exactly, or is Suzlon on the block, basically, but they were quite categorically said that at least for the time being, nothing of that sort on the anvil. But the promoter shareholding, is something a little bit of a concern. 14.47% stake is with the promoter and promoter family, and Dilip Sanghvi, under various entities, holds close to 12% in the company.
Okay, all right, Vivek. Thanks for getting us all of those insights. In fact, we did speak with the Executive Vice Chairman, Girish Tanti, and the Chief Financial Officer, Himanshu Modi, earlier in the day. So let's listen in to what they had to say.
There is a very strong foundation that our Tulsi Bhai had set for the organization. And I think we are on a very strong chart now for growing from here, and we've had internal management discussions with the leadership team, and all of us have jointly committed ourselves to driving the vision and the plans which have been charted out, and we all stay committed, both from family as well as from the management. The Sanghvi family has been a critical, important partner for us in our journey, and we have had discussions with them as part of the transition plan, and there wouldn't be any change as regards to the understanding of the relationships we have. So there's not going to be, their participation shall continue as before.
Consolidated debt as of 30th June 2022, quarter ended Q1 FY23, was about 3,200 crores. The rights issue proceeds, as you know, is about 1,200 crores, out of which 900 crores would go towards debt repayment, and the balance, about 300 crores, is for general corporate purposes and meeting out issue expenses. That's, of course, assuming the issue size is fully subscribed. So in tranche one, which is, out of it, since it's a partly paid share, out of the 1,200 crores, we are calling for 50% of the paid up amount, so roughly about 2.5 rupees per share, which would translate into 600 crores in tranche one, of which 16.5 crores is the estimated issue expenses. So 583.5 crores in tranche one would go towards debt repayment, and from the subsequent tranches, another 316 crores would go into debt repayment as and when the subsequent calls are called for. From the rights issue proceeds, as we pare down the debt, assuming a 900 crore reduction, we would have a total 90 crore interest cost saving further beyond what we would see in the Q2 results as and when they come out.
Okay, well, we need to take a short break. But on the other side, our special segment, Quarter Se Quarter Tak QSQT, Abhishek Kothari will be joining in to tell us what we can expect from the entire banking space. Also, Rima will tell us what to expect from HCL Tech and Wipro as both the companies report their Q2 earnings later this evening. Welcome back. Well, for the Bank Nifty, it seems to be picking up a little bit of pace, so up around 0.5% currently for the Bank Nifty. Just watch out for a couple of the stocks within the broader market. So there is momentum in specific stocks, say, for example, TVS Motors, which is up around close to 2% giving it company from the diagnostic space is Metropolis Health, which is up around 1.5%, and something like an RBL Bank also not doing too badly. So that stock too gaining around 1.3% at this point in time. But let's focus on earnings then. IT is in the spotlight again, and this is because HCL Tech and Wipro will be reporting their Q2 numbers later this evening. Rima's here to tell us about them. First, Rima, we'll start with HCL Tech. Rima, what can we expect?
So let me quickly run you through the expectations. Dollar revenue growth 1.5% quarter on quarter. Constant currency revenue growth should be between 2.5% to 3%, which means similar to the growth rate that it clocked last quarter. EBIT margins are seen expanding by 40 basis points to 17.4%. The reason we're not seeing a significant margin expansion this quarter is because of the wage hikes. The HCL Tech's wage hikes to its employees is effective 1st of July. Profit, according to our poll, should also show a muted jump of just about 4%. The key to track is going to be, does the company hold on to its FY23 guidance? Well, on the top line, the management has been very confident, and even the street is confident that HCL Tech will be able to deliver a 12 to 14% revenue growth. The question is on the margins. In April, the company said that FY23 margin guidance is 18 to 20%. In July, post Q1 numbers, the company said margins will be at the lower end of its guided band, which means closer to 18%. But the street is still not convinced. There are many estimates like Kotak and Ambit who have penciled in HCL Tech's FY23 margins below 18%. So is the management confident about meeting at least the lower end of its guided band? That's something that the street will be tracking very closely when it comes to HCL Tech.
Okay, well, you can catch the management brief, the press, later in the evening at 5:30 p.m. So that's one stock that we're going to watch very closely. But even Wipro is due to report its Q2 earnings post-market hours today. So Rima has a heavy day lined up. Rima, what's the street watching out for this time?
Our dollar revenue growth 2.4%, constant currency revenue growth of 4.2%, which is within the company's guided band of 3 to 5%. So no surprises, at least when it comes to revenues, and top line will be driven by some of the acquisitions that the company concluded. Again, in the case of Wipro as well, the margin expansion is fairly muted, just 15 basis points, and that's because Wipro doled out compensation and hikes to its employees effective 1st September. So there is that 1 month impact of wage hikes, which is why margin expansion, despite rupee benefit, increase in utilization, is fairly limited. Now, again, even in the case of Wipro, the street is going to be watching out margin improvement from here on. They were confident last quarter that margins have bottomed out in Q1. But how much can it rise from here on? The company's medium-term margin guidance is 17 to 17.5%. How soon can they get to that? And secondly, Wipro also gives you a quarterly guidance. So next quarter's guidance will be very crucial. It's difficult to get a consensus this time because of how volatile the macro is. You've got Kotak on one hand penciling in 0 to 2%. You've got CLSA at 2 to 4%. So I think something in the middle should be, what the street is anticipating. And finally, acquisition that they did, Capco, has a great presence in Europe, and it also has a lot of consulting revenues, which typically get cut when things go tight. It's discretionary spending. So performance of Capco and outlook of Capco will be crucial. Back to you.
Okay, all right, Rima. Thanks very much for that. In fact, watch out for the Wipro management addressing the press on their earnings fine print this evening at 4:45 p.m. Time for a break now. Jay Thakkar of Marwari Shares and Finance will join in with his trading strategies. Stay tuned.
Welcome back. Time now to get a handle of what's taking place in the F&O space. The Nifty has surged towards that 17,100 mark, mostly in the last 15 odd minutes. So what that has done is made those call writers at the 17,000 mark run for cover. Just 15 minutes ago, the 17,000 call was actually extremely active. We had over 60 lakh shares in open interest, and now nearly 63 lakh of them have covered and unwound their positions, and we've seen a big spike in the prices of that call as well. On the other side, we've seen a fair amount of writing at the 17,000 put, and for a premium of almost 50 odd rupees, that's telling you that, you know, the 16,950 to 17,000 mark is something that the bulls are looking at in terms of a firm support. Also active in trade is the 16,900 put. Why is that important? Well, because that's telling you that levels between 16,800 and 17,000 could be a fair amount of support, and technical support that, because between 16,900 and 17,000 we have the 200-day moving average. At 16,800 we have the 100-day moving average, and the recent low of 16,747 as well would act as a strong support. The FIs have written a lot of shorts, so any sort of up move will only propel the market higher, because those shorts will have to run for cover. Just watching out for a couple of stocks as we speak. City Union Bank is one of them, which is doing well in trade today, but what's also doing well is the big spike that we're seeing in the open interest on City Union Bank. So that's telling you a lot of long positions are being added out there. And Asian Paints is the other one which I'm tracking, because despite the oil prices being lower than what they were, we are seeing a big dip in Asian Paints from the top, and with a high rise in open interest. So maybe someone is looking at Asian Paints as a shorting candidate. The company reports its numbers on the 1st of November.
Okay, so we have our work cut out for us in terms of all the numbers. Talking about numbers, the Bajaj Auto is still the top gainer. In fact, it's now up over 3%. But you know what? This quarter's numbers are expected to be on the weaker side. On a year-on-year basis, the volume growth for Bajaj Auto is expected to be very muted, just a growth of around 0.6%. And there's been a slowdown in the African two-wheeler market, and hence exports may really dampen the volume growth for Bajaj Auto. However, the lagged impact of raw material inflation is also something that could keep the margin recovery from coming through. So the stock, of course, is up, but it's had a pretty rough run. It's down 13% from the highs that we saw in the month of August. So maybe just some short covering over there. But Jay Thakkar of Marwari Shares and Finance is joining us on the show to talk about that. Jay, good afternoon. First, some thoughts on, you know, stocks like Bajaj Auto, HCL Tech that are running up ahead of their earnings. From a technical standpoint, does it still make sense to go long here or take a fresh long position?
Hi, very good afternoon to you, Sonia, and everyone. Well, as far as the HCL Tech is concerned, I would say that, you know, overall Nifty IT index itself, Sonia, has been showing that positive divergence. I mean, we are seeing, you know, that the selling is getting absorbed at the lower levels, and on the weekly charts as well. That's on the positional charts rather. I would say we are seeing a good positive divergence. I mean, after a clear-cut 5-wave declining structure, that is a triple zigzag falling structure on the Nifty IT index. I mean, around the levels of 26,000. I believe that there is a good support for the index, and till those levels are held, to be precise, it's 26,186. I mean, till those levels are held, there is a fair chance that Nifty IT can, you know, surprise from here on and bounce back to the levels of at least 31,000. That is 38% retracement of the entire fall which we have seen in this year, and that's more than 10% move. And you know, the index has also formed a nice double bottom pattern. So has HCL Tech. It's just that it has to take off the levels of, say, 1,000 on the upside. Once it surpasses the levels of 1,000, I think, you know, we would see a good move, at least in the levels of 1150 to 1200 on HCL Tech. So one can buy above those levels. I mean, there would be a decent risk reward as well as momentum thereafter. And as far as Bajaj Auto is concerned, we are seeing a good positive divergence out here as well at a very short time frame. And I think that, you know, there is a fair chance that it can bounce back to the levels of 3750 in the short term. So I see a bounce in both of these stocks.
Okay. Technically, how would you approach the market? Probably from a more medium-term perspective, Jay. The reason I ask you is that we have a lot of cues this week from the macro standpoint. So from that perspective, what kind of call would you take? Are you taking any call?
We are taking a short-term call right now. Positionally, I think that, you know, markets are in a range, and the range is quite broader. I would say 16,500 on the lower side, and prior to that, the short-term range would be 16,800, which Mangalam also rightly pointed out, due to his 200 demo and a lot of good put writing happening at those strikes. Whereas on the upside, I believe that 17,500, the previous highs, can be tested, because on the FI net long positions, we have seen quite oversold positions there. The numbers are around 14, 15 right now. The PCR is also trading below the levels of 0.7. It's in the range of 0.5, 0.7. That's too quite oversold. And I believe that structurally, you know, the US markets as well seems to be forming a good positive divergence. I mean, you know, we are seeing truncation out there. I mean, we don't see Dow falling much, whereas Nasdaq hit a fresh lows. But then we are seeing some divergence, positive divergence happening there as well, and this clearly indicates that market might remain sideways right now, and the range could be 17,500 to 16,500 on the broader perspective, and a shorter perspective, I believe that 16,800 till those levels are held, at least 17,300 can be seen. So we have a long position for the short term, placing a stop loss below 16,800. And as far as the bank Nifty is concerned, I believe that once 39,000 levels are taken off, you can see further up move till the levels of 39,500, 40,000. But then bank Nifty really has to take off those levels of 39,000. Nifty is showing much more clarity.
Just a quick one before we let you go, Jay. Today Asian Paints is underperforming. It's at the lows of the trading session or lower end of the trading session, whereas Berger Paints is outperforming. It's up around 1.5%. In fact, for this month itself, Berger is up about 1.5%. Asian Paints is lower. But for this year, as we can see, Asian Paints has actually outperformed Berger Paints. Is it time now for one to look at a pair trade possibility out here? This year, for instance, Asian Paints is down around just 4%, whereas Berger Paints is down 19%. Is there any such formation on the chart?
Exactly. We are also seeing the similar kind of structure, and Asian looks a bit sideways right now. The momentum out there has weakened, Mangalam, I would say. And as far as Berger is concerned, I mean, when Asian Paints was moving higher, at that point of time Berger was consolidating. So those two had were not correlating to each other since a couple of weeks now, and now we are seeing that Berger Paint is finally likely to catch up the rally. And once that happens, so I believe then thereafter, the correlation again would be higher thereafter. So right now, definitely one can go long on Berger Paints and go short on Asian Paints. I think, this pair should work at least for the short term.
Okay. All right. Jay, thanks a lot for joining in. Have a great day. Before we slip into a break, just wanted to mention that the market is looking pretty fine. The Sensex is now up almost 400 points and getting better as we speak. High point of trade right now. As we slip into a break, here's some great news for investors like you. You can now track the US market action real time on Money Control. Just log on to the Money Control website or the app and stay informed about all that matters in global markets. Halftime report on CNBC-TV18. We're in the middle of the earnings season. We just started off with TCS, but let's get our special segment, Quarter Se Quarter Tak, where Abhishek is here to tell us what we can expect from banks in this quarter. It is looking pretty good. Abhishek, over to you.
Well, as you mentioned, the loan growth of banking sector has been one of the best loan growth in a while. So the loan growth for the sector in Q2 FY23 was at a multi-year high of 16.44% YOY and around 4% sequentially. There has been business updates which have come in from few lenders, which shows that, private banks have gained market share on the back of strong loan growth momentum from the PSU banks, that they have gained market share. So RBI has been, raising the interest rates. So banks have also raised interest rate in Q2. So you can expect net interest margin of the banks to remain stable or improve on a sequential basis, given the fact that they have also raised interest rates. Asset quality will not be an issue. We may see improvement in asset quality with lower slippages this time around and better recovery. Large part of the slippages that may get reported will come from restructured book. Credit cost or provision for NPA divided by the advances ratio will be lower on a sequential basis, that is quarter on quarter, for majority of the players. Now PSU banks will not see a huge reversal in the treasury losses that they had in Q1 FY23, although many had guided for the fact that 50% of the losses that they had in Q1 may get reversed in Q2. We may continue to see private banks investing in their franchise, which may keep their operating expenses on the higher side. We have some of the estimates coming in from Kotak Securities. For SBI, their estimate of NII is a 7.5% growth both YOY and quarter on quarter, while net profit they estimate a growth of 52.5% YOY and close to 92% sequentially. For SDFC Bank, Kotak Sec has an estimate of NII growth of more than 17% YOY and about 6.3% quarter on quarter, while they are expecting a profit growth of 27.5% YOY and about 22.5% sequentially. For ICICI Bank, the NII estimate is a growth of 18.7% YOY and about 5% sequentially, while profit is expected to grow more than 35% YOY and close to 8% sequentially. For Axis Bank, the NII estimate by Kotak Securities is a growth of close to 27% YOY and about 7% sequentially, while profit expectation is a growth of 46.5% YOY and more than 11% sequentially. Back to you.
All right, Abhishek, thanks a lot for that. So that's what you can expect from the banking space. But moving on, the Reserve Bank of India has reviewed the regulatory framework for ARCs, allowing them to act as resolution applicants under the Insolvency and Bankruptcy Code. To get a little more understanding on this, my colleague Ritu Singh is joining us to give us all the details. Ritu, over to you.
Well, as RBI had indicated earlier, it has now reviewed the regulatory framework for ARCs, and several important changes have been made. One of the key ones is that now ARCs can participate in the insolvency resolution process under the IBC, but this is going to be subject to certain conditions. For instance, they have to have a minimum net owned fund of at least 1,000 crores. They should have a board-approved policy for taking up the role of a resolution applicant. And in the case of a specific corporate insolvency process, ARCs cannot retain any significant influence or control after 5 years from the date of approval of the resolution plan, and make more disclosure with respect to the assets they've acquired under IBC, among other conditions. The second important change is that the minimum net owned fund requirement, that has increased from 100 crores currently to 300 crores, but this will be done in a phased manner by 2026. Third, ARCs will, by transferring funds, invest in the security receipts at a minimum of either 15% of the transferor's investment in the SR or 2.5% of the total SRs that are issued, whichever is higher on an ongoing basis. Number 4, the management fee or incentives which are charged towards the reconstruction or securitization activity can now only come from the recovery effected from the underlying financial assets. Number 5, there are several changes with respect to governance where, for instance, the chair of the board will have to be an independent director. The tenure of the MD, CEO and whole-time directors cannot be more than 5 years at a time. They will, of course, be eligible for reappointment, and they cannot continue beyond the age of 70 years. There will be fit and proper criteria that will be applied as well. Other than this, settlement of dues by borrowers, which we often see under one-time settlement, can be done by ARCs only after the proposal is examined by an independent advisory committee. And this settlement should only be done after all possible steps for recovery have been exhausted. So these are some of the key changes that have been brought about for ARCs.
All right, Ritu, thanks a lot for that. Before we step into a short break, just keep an eye out on a couple of these consumption stocks which are actually bouncing back after a big decline yesterday. United Spirits and United Breweries, both of them at the high point of trade, and giving it company is Jubilant FoodWorks, which too has recovered about 1.5% from the low. So there's pizza, there's beers, and there's other spirits as well. All of them doing well.
Gambling, right?
Only no gambling, only no gambling. We take a short break, come back on the other side. Manisha Gupta joins in with Peter Maguire, who's the CEO of Exim Australia.
Back joining us on the show now is Peter McGuire from Exim Australia. Peter, hi, and a fourth straight day of decline when it comes to the crude oil prices. So clearly, while we did hope that we might perhaps see $100 a barrel, that clearly hasn't been the case. Back at around 93, 94. What's the sense that you get?
Well, I think that's right, Manisha. I mean, it was very, very strongly bid up from Monday, and I thought we're off to the races, and it was nearly up $10 for Brent and for WTI, and it's certainly given up a bit of those gains. There's no doubting that, and probably a bit of profit taking. So we're just waiting to see, I think, what that number drops over the next 24 hours as far as US inflation and the general themes this week with, uncertainty with equity markets. And that's where a lot of the smart money is plowed into US dollars. So that's also had an uptick. So I think crude will come back. Just wait a little while. I think we're all being a bit impatient.
Come back, hasn't come back below $90 a barrel?
Oh, yeah, it'll be back above that, Manisha. I think look, a couple of things. I heard that, Larry Summers, or Professor Larry Summers, come out the other day, and what he said as far as cancelling Keystone Pipeline, being made a mistake with that, made a mistake being hostile as a country for natural gas, and also for all sorts of permit activity. So they've declared that. So that's where it's coming. And I think there's a lot of uncertainty with the Biden administration. I think oil will go up from here.
Okay. And yes, there is that midterm elections from 8th of November as well. So that's less than a month away. What are you expecting in US then? Well,
I think we're leading into that, Manisha. If we don't see any, I mean, we've got a lot of big geopolitical storms on our horizon. We still haven't put to bed anywhere near that Ukraine-Russia situation. What's going on with with North Korea and missiles, and the uncertainty leading into Taiwan and China. There's only 3. So, you know, we've got to work through some of that in the next couple of weeks. And then naturally 4 weeks out, I think that it's, by the looks of it, it's going to be a whitewash. He'll get a shellacking, Biden, but, you know, that comes down to people going and voting. So it's interesting to sit here in Australia and observe all of these moving parts.
And then you have, US inflation data today, and tomorrow you have China inflation data, and then there is China trade data on Friday. October 27th is the ECB monetary policy. Come November, we have midterm elections. We also have the US Fed policy coming in. So there's just so much happening in the next few days and sessions there. What is the range that you'll put to crude oil prices in the light of, or a background of all of this?
Well, if it's underwhelming as far as that inflation story, and if it's worse than what the market anticipates, then that, I think, is going to send shivers up naturally to the central bankers. And then the next part, of course, would be I think equities will come off. Also, the other side of it, of course, is what happens as far as US dollar. Crude, I think, will take a little bit of a jump. So, yeah, we haven't put to bed OPEC Plus has cut of 2 million barrels, and all of that's got to work through the market. So it's fun and games over the next couple of weeks, Manisha. Hold the wheel steady, because I think there's plenty of dollars to be made.
Okay. But how is the range looking to you? I mean, do you think we're going back to 97, 90 at any time soon?
Yeah, I wouldn't be surprised. I mean, you're still at 94.50 for Brent, so you aren't far away. I mean, you were nearly there yesterday, so I think it's given up a bit of that, and I think it'll just have a little bit of a breather, and that's what trading's about. It has those wild swings, pick up a couple of bucks here and there. I think it'll trend higher from here, Manisha.
And what's your sense on the gas prices, really? Because we've seen natural gas prices in US come off. The European gas prices still hold on the firmer note. We do understand that Europe has been able to make a good storage, 87% of their capacity. How are you looking at those, and how does the winter look like for Europe now?
Well, the winter looks bleak because winter, naturally, it's incredibly cold there. So we've just got to make sure that everyone gets heating to their homes. It's the first part. Second part is that, yes, you're right, as far as NYMEX, nat gas back at 660. So it's really had a big washout, that nat gas futures. And then the other side, what's happening as far as European gas prices? Well, we all understand the conditions that they've got to play with. You hear stories as far as coal-fired power plants, nuclear, and you name it, whatever else, to try and maintain some form of power supply all over Europe this winter. So we're a month from it getting very cold, and I think that'll tell a different story, Manisha.
Okay, all right, Peter, as well as Manisha, thanks very much for joining in and giving us all of those details. Well, it's an important story which is flashing on your screen, where the cabinet has approved a one-time compensation to the oil marketing companies when it comes to LPG in particular. This is source-based information that we are picking up at this point in time. So let's see if there is any kind of impact in terms of the OMCs. So maybe we can pull up a couple of them, such as HPCL, IOC. Remember, there was a large, there were murmurs of this taking place. But as of now, this is what we know. We'll do one thing. We'll take a break with the news that the Nifty is currently up around 100 odd points. So there is some amount of momentum which is being gathered. This story and more on the markets coming up next, just after a short break on Business Lunch.